What up, everybody? Welcome to another episode of Bag Talk. Today, we're going to tell you our prediction for what will happen to the stock market in 2023, because tomorrow we get some huge news on inflation, and that's going to determine a lot. And when I say a lot, I mean like a lot. This is a big report. So you want to hear about, how we break down inflation and what it could possibly mean for the stock market. So make sure you stay to the end. This is big for you. This is big for your portfolio, big for your future, our future, the country, and everything. So without further ado, Moosey, let's get into it, bro.
Yeah, so everything we share will be in the description below so you can follow along. But let's get into it. The first thing we want you guys to hone in on is this chart right here, right? So what this is showing you is the inflation numbers all the way from January 2000 to right now, 2023, right? So it's going to show you everything you need to know. And there's certain things we want you to keep in mind before we get started with the overall theme of the video, right? First, in 2022, the highest we saw inflation go was 9.1 in June. It went all the way down to 6.5 in December, which is why you've been seeing the stock market do what it's doing. The whole rally, because inflation's coming down, it's looking great, etc., etc. However, just keep in mind that the year 2022, the average inflation right here was 8%. That's what we want you guys to remember before we get into the video. And last but not least, just keep in mind, February 14th, so tomorrow is when you will find out what the inflation numbers are for January. So now that we got that out the way, Rel, just explain to people what is inflation, why is it important, and what it actually means.
Yeah, so inflation, we're tracking the price increases across goods and services for our country. And so we don't want prices continuously going up where people can afford it, right? You want it to go up a little bit so it shows health and growing of our economy. That's why we try to keep the rate around 2%. But we seen inflation last June of 9.1%. That's very unhealthy. We can't have that. And so therefore, that's why we have Jerome Powell and the Federal Reserve to come in and increase interest rates. That way they can bring inflation down. We just don't want prices increasing super rapidly. That's all.
Yep, exactly. Because when that happens, obviously it gets harder for the average person or just the consumer in general to enjoy life, because things become more expensive. They have to rely more on debt, etc., right? And something that obviously relates to consumers and everything of that sort is gas. But before we talk about gas, what we need you guys to do is to like this video. Please help us out. It's completely free, and we put a lot of effort and time into making these videos. So hook us up. But let's talk about gas, right? So that's something that we cannot live without. It sucks. But when you think about it, the national average price for regular gas has jumped to $3.51 a gallon. That is up, right? So the national average has climbed by more than 9% since the end of last year, which is crazy. Because, Rel, correct me if I'm wrong here, but it seems that gas is a major discussion point when it comes down to Jerome Powell and the Fed with what they decide to do with interest rates and how they deal with inflation, right?
Yeah, for sure, bro. That's something they look at.
If this is going up and not many people are talking about it, do you think it's going to be a good thing or a bad thing?
Man, I think it might really affect our inflation report coming out tomorrow, and I think it's going to shock a lot of people. And if it doesn't affect this report coming out tomorrow, I think it will affect upcoming reports, because this is a bad trajectory. Gas was going down, and out of nowhere, as you see on the screen, we just had the biggest increase to start a year since 2009 in gas prices. Mm-hmm. So that's a bad direction for gas to be going back up, because if gas is going back up, inflation is probably going to go back up. Mm-hmm. And inflation's been going down. So that's going to shock the market. And one thing the stock market hates is uncertainty and surprises. So wait, bro, just wait on it. It's coming, yo.
And talk about the whole China situation with what they're doing, how that could also impact our gas prices, and then in return, obviously impacting inflation.
Yes, so guys, remember, China was on COVID lockdowns, y'all. It was on COVID lockdowns. So now that they opened China back up, China has a huge demand for gas. So we already have a supply chain issue on gas for our global economy. Now that China's back into the market, they're going to be demanding a lot of gas, which is going to put upward pressure on gas, right? So that's why gas prices are going to continue to rise now that China's back. So if gas is going to continue to rise, like I said, look at our inflation reports coming up.
Exactly. So that covers gas. We talked about inflation. obviously hurting people, and it might actually go up. But this is something that we want to talk about even for the average person, right? So when you think about it, you would think that inflation's coming down, things are looking great. But in October of 2022, while inflation was actually coming down, it said life is getting more expensive by the day. 32% of Americans are struggling to pay their bills. Now you're like, yo, 32% of Americans, okay, but are they making money though? All right, I got you. Let's focus on the high earners, right? So it says 36% of employees earning $100,000 or more say they're living paycheck to paycheck. That's not good. So, bro, let's talk about that real quick. Like back in the day, in 2005 and 2010, we were just kids rocking out, playing basketball, et cetera, et cetera. When we heard, yo, this person making 100K, what did you think right off the bat?
100K is like $1 million to me back then.
Right? Like you were like, yo, I'm balling out, et cetera, et cetera. Now you hear 100K, you're like, okay, like that's cool. To be fair with y'all, $200,000 is what 100K was back in 2010. So it has a little bit of value. You know, you think you're doing well, but it's sad to say, watch, when 2032 comes around and someone says they're making 200K, they're going to be living very average. And that's the sad truth about why inflation sucks. So now that we got that there, let's go back to this chart, right? So we already explained to you guys how this works. When interest rates are going higher, inflation is going lower. When inflation is going lower, interest rates are going higher. So the stock market's been going up because we see inflation coming down from 9.1 all the way down to 6.5. And that's why we're thinking it's going to continue going up. Everyone's really optimistic. But all of a sudden, if we don't see such drastic drops, and we just see go from 6.5 to 6.4, Rel, what do you think is going to happen, bro? Because remember, the goal here, guys, is to get this rate to 2%. And a lot of people think it's going to happen, but they're thinking it's going to happen because of drastic rate drops. If that doesn't happen, what goes on?
Bro, I think the stock market will react very negatively if we see a spike out of nowhere, right? Now, if we see improvement, like another big chunk come out of inflation, the stock market gonna love it. I think they'll love that because it's like, wow, we're going in a great direction. It looks like we're actually avoiding a recession. Could you believe that? Because unemployment is at historic lows. Like it hasn't been this low since I believe 1959. And so unemployment's low, yet inflation's coming down. That's like the best of both worlds. Yeah, we love it. But now, if we don't get a big chunk out of inflation, and it's only 6.4, I think it might be a mixed reaction. Some people might be happy with that, some people might not. But imagine if it goes up. Imagine if inflation goes back to 7 or even just anything higher than 6.5. I think the stock market is not going to like that because it makes them uneasy. Like, man, maybe we don't have a hold on this inflation thing. And like, I know we brought up gas, but I wanted to elaborate a little bit on the gas thing. Guys, it's not just like gas. Like when it comes to, my car, driving your car, understand that gas prices and oil affects everything because it just affects services. People have to pay more for their services, pay more for goods. That's why that affects food now. That affects all types of services when gas is up. So it's like, as gas increases, it's kind of like it brings every industry along with it simultaneously.
It's like utilities. Don't forget, your heat uses gas and all that stuff too. So your heating bill, your oven, all that stuff you use is going to get higher. Just pointing that out.
Exactly, bro. You see what I'm saying? And that's why it's like people are not talking about. We just had the highest increase to start a year since, what did it say, 2009 or something?
Yeah. Let me go back to it. Basically, it says since the end of last year, which is actually insane, and said the biggest increase since 2009. Yeah.
Since 2009, bro. Come on, y'all think that's not going to affect the reports coming up? If it's not tomorrow's report, it will affect upcoming reports because I think gas will continue to push up. So it's like, overall, just looking at the inflationary picture now, understand, Jerome Powell was increasing interest rates to decrease inflation. Okay. And he was trying to almost bring on a recession. That's how people look at it, because he kind of wanted unemployment to spike up to show that, hey, people are, struggling, and therefore we can then eventually decrease interest rates. But he said, listen, at the end of the day, bro, I'm not going to decrease interest rates if unemployment is still low and inflation is coming down. I could just keep interest rates this high and just leave them there. And that's what he said he's going to do. Literally, that's his words. So therefore, if inflation comes down, He's going to keep interest rates right where they are. And how could American businesses do in that environment? That's what I'm wondering. Because it's like, it's cool for now, but how well can a business do if interest rates just remain high like this? I think eventually it's going to start weighing down on these businesses, especially growth businesses. And therefore, that means their stocks are going to have to start eventually suffering. So if they haven't suffered yet, they're going to start suffering as they try to maintain shape in this high interest rate environment. That's what's sad about this. Now, Jerome Powell also said he will decrease rates if something does crack. So say unemployment does spike and people start losing jobs all crazy. That's the only how he's decreasing rates. But think about it. If we enter that situation where we do have a recession and unemployment does go crazy, that means the stock market is going to fall anyways. So it's like in both scenarios, whether he decreases rates now or later, regardless, the stock market still has a chance to fall. So for me, looking at where the stock market is right now, it's like, oh man, it's been rallying. Everything was good. Yeah, I think it's just, like we said, a rally, but I don't think it's going to last. I think we're going to come back down. I don't think we're going to come back to new lows, but I don't think that we're going to sustain at this rate. We're either going to consolidate for a while or it's going to come back down.
Yeah, and I think this is the other part, right? So when you guys focus in on the chart, it's not the first time that we're talking about this where inflation went down and went back up. 2005, you see it started at 3 and went all the way to 3.1, 3.5, then it went down to 2.8, then all the way back up to 4.7. It's happened before. It's right here in front of you guys. 2006. Started at 4, went to 3.5, then went right back up to 4.3. It's happened before, guys. Not the first time that this is going to happen. History always finds a way to repeat itself. And then the point that Rel made. So I think you're saying here, bro, like something has to crack, right, for Jerome Powell to decrease interest rates.
Yep.
Well, that something might actually be credit card debt. And we talked about this in our previous videos as well. Something that I really want to point out here is that when you go back to this article, it says that the rising cost of living is causing more consumers to fall behind on their monthly bills. When people fall behind on bills, what they tend to do is use more credit cards because they have to sustain themselves, right? They have to pay to live. Those credit cards then have higher interest rates. Well, the interest rates has to be paid back and the debt gets higher and higher. If you can't pay it back and the bubble becomes so big, it eventually, boom, pops. If that pops, it causes the economy to get hurt. It causes all these businesses to then fail who are dealing with credit cards. And then all of a sudden, the American person suffers, which is what we don't want to see. And we're not trying to be a channel that's super negative or nothing like that. But at the end of the day, it's just the reality that you guys have to face, right? We need this number to go down. If it doesn't go down, it's going to be a problem. If it doesn't go down substantially, it will be a problem because that number from 6.5 right here needs to be at 2 or 3. And unless it is at 2 or 3, we're not happy. It's as simple as that.
And it's not, and people are expecting these big chunks every time. Like, yes, we went from 8.2 to 7.7 to 7.1 to 6.5. Those are big chunks. It's easy to have that at first in the inflationary fight, but eventually it's going to be much harder to get things to move down that rapidly. And we're going to start seeing smaller incremental decreases if it's going to even move in that direction, or it can even move up, as Newski just explained. But don't expect like big chunks down all the way to 2%. That's not really realistic nor historically accurate.
Look at 2019. Literally 1.6 all the way up to 2. All the way up to 2.1. That's the highest number. 1.6 to 2.1, 2.3. It literally went in the same cycle. 2018, same thing. 2.1 to 2.7. That's it. That's the highest and lowest. It was in that cycle. But bro, in 2022, went from 7.5, 9.1, 6.5. That's insane. That's not even realistic, which is what we're saying, that you have to be careful. Make sure you protect yourself and don't just put all your money in the stock market thinking that it's going to go higher, right? You have to be very careful when it comes to this stuff. And we want to share this so we make you aware. All right. But if you're still watching, we appreciate you. Thank you so much. Please make sure you like, comment, and subscribe to the channel. Plus hit that little notification bell because we drop
2 videos a week.
You don't want to miss them. Enjoy your Valentine's Day. Check us out on Wednesday. But until then, peace.
Peace.
Soundstripe.